Good afternoon, folks. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for tuning in, kicking off your afternoon right here. And boy, we got quite a market going on, and we got a lot of moving parts in this market, folks. The biggest moving part right now is tariffs. And yeah, the tariffs are off. And let's kick it off with the headline. Trump backs off. Greenland tariffs, citing a quote-unquote framework deal. Let's see what that deal looks like as potential volatility, pushing it off to the future. But yeah, framework of a future deal. And yes, unclear what that agreement entails. We have formed the framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. Based upon this understanding, I will not be imposing the tariffs that were scheduled to go into effect on February 1st. So there's a release off of risk. And yeah, there's your acceleration, man. S&P's up by 100 points, up 1.5% at 6930. NASDAQ 100, we're up by 1.8%. Look at the two-way volatility in this market, man. Now you have a Federal Reserve case in front of the Supreme Court. Okay, the arguments were held on that this morning. You can listen to those live if you want. Appears wary of Trump bid to fire Cook. Now, who knows what that means, all right? You can go listen to those arguments if you want for yourself. But the Supreme Court, so you get the Fed in focus, you get the tariffs in focus. Of course, we have a Fed decision 1 week from today. Yeah, we'll see what happens there. A lot of moving parts, but tariffs are off and stocks rejoice. You jump over the VIX. 1695. We were at 21 almost this morning, almost 20 on the open. And yeah, volatility coming out of this market right now. We jump to yield, same thing, reverting a bit. You got a little bit of higher price, lower yield. Now, all things considered, okay, we still got a problem when it comes to yield, man. You got lower price, higher yield today. You get a brief reprieve. But this move started when we were at 112.17. We're at 111.21. You're almost still a full point below where we were just on the 15th, which was last Thursday, coming into that number. Jump over the dollar right now, up 15 pennies at 98.73. You go into the 5-minute for some volatility on the dollar. You were at 98.40. There's your volatility on the news breaking that the tariffs are off. We're at 98.79 right now on the dollar. And metals continuing with the volatility. And boy, they were running to metals, and now they're running from it. Be careful in this metals market, folks, okay? Especially if you're in some of those equities. There's nothing wrong with holding them, but put a stop in place. All right, I was looking at the program yesterday. You look at some of the biggest equities out there. Barrick, you're off by 2% today, okay? You know, you're going to see some quick turnarounds here on the equities if we really start to get a pullback. And I don't think we're going to get a rip-roaring pullback in gold. All right, but we haven't had any real substantial pullback in a long time, folks. Realistically, this has been a straight shot for almost 2 years now. Okay, it was about February 2024. You were at 2,000. We're pushing 5,000. You got two consolidations in there and a brief pullback at the end of 2025. That's it. Now, 5,000 is hanging out there. Nice round number. We'll see if we can ring that bell. But right now, you got metals under pressure. Okay, and on a weekly basis, maybe you just got to come back and test this high volume area, right? You got a high out there, 43.92. That's $400 below where we're at right now, but that would be a nice test. You pull back on lighter volume. Now, on a weekly basis, right, we already have some big numbers. It's only the second day of the week. It's a short week, but look at these 2 days. Look at these 2 days. Okay, and this could be a blow off top, folks. You know, you come in, we got all that volume. You got volume at the highs. You do. But things are getting a little funky at these highs when you move into this degree. A little bit parabolic, okay? Silver's the same deal, except you do have volume, right? Gold has all that volume in October. Silver's ramped it up, man. Highs last week with volume. You're probably not going to do it this week. You take a look at the daily, not even close to as pronounced as gold. Okay, this was a real risk off. What the heck am I going to buy if we are going to now be levying tariffs if we don't get to take over territory, right? And gold was a big benefactor there. Silver, not so much. It was, but not to the same degree as gold, not with the volume at all. Well, that's unwinding a little bit right now, but it also points to the fact that silver doesn't have that same store value when you have this type of a degree run up. If you're looking for safety right now, all right, silver's a more speculative asset just because of the recent run up. And hey, longer term, okay, I think rates are going to be under pressure. You know, there's a lot of talk right now about the TLT. Longer term yields, very high. You're going to get a new Fed chair attempting to bring those down. But when it comes to mortgages right now, it's not happening, right? You check out this chart. How's that for lower price, higher yield? right? Now, what I've often said, okay, is that we're biased to think that we're going anywhere near where we've been in the past, when we had rates hovering near 0%, okay? We have this recency bias of an environment where rates are probably not going back there anytime soon. So don't get caught into this trap of saying, oh, the TLT is at 87, okay? Rates can only go down from here because they're so high. That's not the case, folks, okay? That doesn't mean you have rapid inflation, but it's not that simple. It's not at all. Take out this huge chunk of area, okay? And I remember Larry Pesavento on the air, right, talking about German bonds, negative, going, it doesn't work this way, folks. It's not going to happen. It's got to come back to reality. Nobody pays you to hold their money, and then you give them back less money, right? You got a negative 1% interest rate. You give somebody $100, they give you 99 back in the next year. That's what was going on in many Euro nations during that time. So rates under pressure, but right now I think the impetus is going to be that they're going to try and get that under control, okay? And that's going to face some weakness in the dollar. And you're right up against that trend line right now, 98.74, 98.79. And on a longer-term basis, when it comes to metals, yeah, that's going to give metals a lift. But guess what? This market needs to breathe, okay? We haven't allowed this market to take a breath in 2 years. Now, you consolidated for 1, 2, 3, almost 4 years, right? But we're talking about a 24-month run, man. Remarkable. All right, we jump over to Netflix. Netflix out with their earnings last night. We'll talk about this a little later in the program. They catch a little bit of a lift today. They're going after Warner Brothers, of course. They upped that offer to all cash yesterday. Netflix off 2.8% right now. Now, revenue is supposed to grow 13%. They grew at 16%. They're not growing as revenue as fast as they want. You know what's going to help? More content. Yeah. They got a system. They've perfected it. They've got a system, and that system's selling ads, and they need more content, and they're going after it with Warner Brothers. Warner Brothers $28.50 right now, and Paramount Skydance looks like it's not happening. Hey, you know what? As a long-term holder of that equity, and listen, folks, this is a growth equity, tiniest portion of the portfolio. Okay, it doesn't get more growth equity than this thing, right? But longer term, yeah, they're going to be a player. Paramount, they're going to be a player in this. And you know what? Maybe it's not the worst thing if they don't go spend $100 billion for Warner Brothers. Because you see how Netflix is reacting? S&P's up 99 points. We're coming right back, folks.